Let's talk about Taiwan, a vibrant democracy, famous for bubble tea, night markets, and a tech industry that powers much of the world's electronics. But beneath the surface of this energetic island, something extraordinary was brewing, something that would soon send shockwaves through global finance. Today, the real action isn't in the night markets or the tech factories, it's in the heart of the financial district where skyscrapers gleam and fortunes are made or lost in seconds. On July 1, 2025, the new Taiwan dollar, known as the TWD, went absolutely wild. In a matter of hours, it surged against the US dollar like a rocket, catching even seasoned traders off guard. Currency charts lit up with dramatic spikes, and financial news tickers buzzed with urgent updates. Inside trading floors across Taipei, chaos erupted. Traders were glued to their screens, frantically analyzing data, making split-second decisions as the TWD soared higher and higher. The atmosphere was electric, equal parts excitement and panic. Yet for most people on the street, this financial drama was invisible. Commuters hurried to work, students sipped bubble tea, and life went on as usual, unaware that the value of their currency was swinging wildly. But in the world of finance, alarms were blaring. This wasn't just a blip, it was a 5-alarm fire, threatening to upend markets and unsettle the economy. Surprisingly, the TWD's surge wasn't driven by booming tech exports or a sudden craze for pineapple cakes. The real trigger was the insurance industry, a sector not usually associated with high drama. Taiwan's life insurers, some of the largest and most influential financial players in Asia, suddenly set off a chain reaction. Their decisions, made in boardrooms high above the city, would ripple across the globe. The actions of these insurance giants sent shockwaves through the economy. All of this chaos was sparked by a currency wobble that began far from Taiwan's shores, but quickly spiraled out of control. This was a story of massive bets, unforeseen risks, and a desperate scramble to avoid losing billions. Traders and executives alike were forced to make high-stakes decisions in real time. Beneath the surface, the TWD's spike revealed a deeper problem. One that tied the retirement plans of millions of ordinary Taiwanese to the unpredictable winds of US politics and global markets. The fate of pensions and savings now hung in the balance. And at the heart of it all was a staggering amount of money. Billions of dollars moving at lightning speed, reshaping the financial landscape in ways few could have predicted. The story was just beginning. What happened next would test the resilience of Taiwan's economy and reveal just how interconnected our world has become. Here's the heart of it. Taiwan's life insurers control $760 billion in overseas assets, more than Switzerland's GDP. But they don't invest in wild ventures. They buy foreign bonds, especially US government bonds. For years, this was a safe, profitable play: collect premiums in TWD, invest in US dollars, and earn steady returns. But this model depends on the US dollar staying strong. When you rely on another country's currency, you're just a passenger in their car. In 2025, the US dollar started swerving dangerously. Suddenly, Taiwan's insurers were clutching $760 billion in assets, but the road ahead looked treacherous. Their safe strategy was now a massive risk. The stability they counted on was gone. The question, what happens when the world's safest bet turns volatile? Taiwan's insurers were about to find out, and the stakes couldn't be higher. Why does a weak US dollar spell disaster for Taiwan's insurers? It might sound like a distant problem, but for the people running some of Taiwan's biggest financial institutions, it's a nightmare scenario that can unfold almost overnight. Here's the issue. Their insurance policies are written in Taiwan dollars, but to earn better returns, they invest huge sums in US dollar assets. This creates a risky mismatch, one that's manageable when exchange rates are stable, but can become catastrophic when the dollar tumbles. When the US dollar weakens against the Taiwan dollar, the value of those overseas investments shrinks dramatically when converted back. Suddenly, the money they thought they had to pay out future claims just isn't there anymore. Every drop in the USD-TWD rate can wipe out millions, sometimes even billions, in value from their balance sheets. It's not just a number on a screen, it's real money that vanishes, putting the entire system under strain. Regulators keep a close eye on these companies, demanding they always have enough assets to cover every policyholder's future payout. It's a strict requirement, designed to protect ordinary people's savings and peace of mind. But when the dollar falls, insurers risk falling short of these requirements. Suddenly, they're scrambling to find ways to plug the gap, whether by selling assets, raising new capital, or cutting back on new business. This isn't just a temporary setback or a paper loss. For some insurers, it's an existential threat, a challenge to their very survival. The stakes couldn't be higher. Imagine you've saved for years for a dream vacation, only to discover at the airport that your money is suddenly worth much less. Now imagine that same shock, but multiplied by billions of dollars, affecting not just one person, but millions of policyholders. That's the scale of the headache Taiwan's insurers faced. Their entire business model, built on careful planning and long-term promises, was suddenly at risk. Boardrooms filled with tension, executives scrambling for solutions, and employees fearing for their jobs. The pressure was relentless. For some, it felt like the ground was shifting beneath their feet. The weak dollar wasn't just a nuisance, it was a full-blown crisis threatening the stability of the entire industry. News headlines blared warnings, financial markets reacted with panic, and regulators demanded answers. The world was watching, the clock was ticking, and the pressure was building fast. Something had to give, and soon. As the scale of their losses became clear, insurers across the market were gripped by panic. The atmosphere on trading floors was electric with anxiety as everyone scrambled to find a way out of the mounting crisis. In a desperate bid to shield themselves from further damage, insurers rushed to hedge their currency risk, hoping to regain some control over the situation. They turned to forward contracts, signing deals at a frantic pace to lock in exchange rates. The hope was simple. By fixing the rates now, they could stop the financial bleeding and avoid even bigger losses if the currency moved further against them. But as fear spread, everyone rushed to do the same thing at once. The market became a stampede, with traders and insurers all clamoring for the same contracts, amplifying the sense of urgency and chaos. The demand for Taiwan dollar, TWD, forward contracts exploded overnight. Screens lit up with surging numbers, and the volume of trades reached unprecedented levels. To hedge their positions, insurers began selling off US dollars and buying up TWD in massive quantities. This sudden, overwhelming demand for TWD sent its value soaring, pushing the currency higher and higher. Ironically, their attempt to protect themselves from losses was now fueling the very currency surge they feared. Each new hedge only added more pressure, making the situation spiral further out of control. The more aggressively they hedged, the more the TWD soared. It became a vicious feedback loop. Every action to mitigate risk only intensified the problem, creating a runaway effect in the market. The market was soon overwhelmed. There simply weren't enough sellers willing to meet the insatiable demand for TWD. Liquidity dried up, and prices shot even higher as buyers scrambled for any available contracts. The TWD skyrocketed to levels no one had anticipated, and what began as a defensive move by insurers quickly deepened the crisis, sending shockwaves through the entire financial system. In their frantic efforts to avoid disaster, insurers had inadvertently made things much worse. Boardrooms filled with worry, and traders watched in disbelief as the consequences of their actions unfolded. It was a classic case of the cure becoming the disease. The very measures meant to stabilize the market had instead destabilized it, leaving everyone searching for answers. The central bank, caught completely off guard by the speed and scale of the surge, scrambled to respond. Policymakers watched in shock as the situation slipped beyond their control. The financial system was now in uncharted territory. Uncertainty reigned, and no one could predict what would happen next as the market teetered on the edge. And as the dust began to settle, it became clear that the fallout from this self-inflicted crisis was only just beginning. The true impact would take time to unfold, leaving the entire industry bracing for what came next. Why did the US dollar suddenly weaken? A mix of protectionist US trade policies and unpredictable political statements spooked global investors. Uncertainty drove money out of the dollar. The US Federal Reserve signaled rate cuts, making dollars less attractive. Investors started diversifying, selling dollars for other currencies, including the TWD. After years of dollar dominance, the world was ready for a change. The dollar became last season's fashion, and Taiwan felt the impact first. A surging TWD sounds good, until you look closer. Taiwan's exporters like TSMC took a huge hit. Their US dollar earnings shrank when converted back to TWD. Profits fell, competitiveness dropped, and the stock market tumbled. Importers and consumers benefited from cheaper foreign goods, but the export sector, the backbone of Taiwan's economy, suffered. Some insurers who hedged early made short-term gains, but most faced chaos. The economy was split, importers cheered, manufacturers groaned, volatility made planning impossible. The TWD surge created winners and losers overnight. Instability became the new normal. The government faced mounting pressure to restore order. Taiwan's prosperity was suddenly at risk. The stakes were national, and the clock was ticking. With the TWD out of control, officials scrambled to act. First came public reassurances. We're monitoring the situation, hoping to calm markets. Behind closed doors, regulators demanded insurers slow their hedging. The central bank intervened, selling TWD and buying US dollars, but the market's momentum was fierce. FX swaps were offered to insurers as a safer way to hedge. Regulators considered easing rules to give insurers breathing room. The goal: break the panic and restore stability. The government was desperate to show someone was in control, but the crisis was far from over. The chaos forced Taiwan's insurers to rethink everything. Their old mantra, buy US dollars, was shattered. Now, diversification is the new strategy. Insurers will gradually shift away from US assets, buying more in euros, yen, and other currencies. They'll also look at new asset types, corporate bonds, real estate, infrastructure, even global stocks. The goal: reduce risk and build a more resilient portfolio. This shift could weaken the US dollar further if others follow. Taiwan's insurers may spark a global trend. The world is watching. What began as a local crisis could reshape global finance. The dollar's dominance is no longer guaranteed. The insurance industry's next moves will have worldwide consequences. This isn't just Taiwan's story, it's a warning for the world. A few decisions in one industry, swayed by global politics, triggered a national crisis. Taiwan's insurers lost faith in the US dollar, and that should make everyone pay attention. The government is balancing financial stability with export competitiveness, a high-wire act with no easy answers. Central banks and investors worldwide are watching, wondering if they should diversify too. Will the US restore confidence in the dollar, or is this the start of a new era? Taiwan is now a real-time stress test for the global financial system. The tremors from this small island could signal a much bigger earthquake ahead.